Yes, welcome to our corporate accounting class. Today we are going to see that problem number 5, that the problem taken from Jain and Naran. We are required to prepare the balance sheet under new format, that is schedule 3. Okay, so we are required to prepare only the balance sheet. Some set of informations are available. From that we have to prepare the balance sheet. The first one, share capital is given. This share capital that should goes to schedule 1. Okay, share capital we have to take. Calls in arrear is also given. Two ways we can take. One, that calls in arrear is deducted from share capital, or the same calls in arrear can be shown in other assets in asset side. Better, the regular practice we can take it in the schedule 1 deducted from share capital. 750 minus 5,000, that comes to 7,45,000. Then land building, both the items are taken under non-current items, non-current assets, which means fixed assets, right? In next part, next to that share capital schedule, I have showed that land item, then building. Then another one is a general reserve. General reserve, the term itself is explanatory one. You can able to understand. General reserve is taken under schedule 2, reserves and surplus. Okay, general reserve of, yeah, how much amount given? Here it is given as 50,000 general reserve. That you can take it in the this one, schedule number 2, reserves and surplus. You can take. Then loan from IDBI. This amount of loan 1 lakh rupees is a non-current liability. Okay, it is considered as that loan is a long-term loan. Okay, you are having two types of loan. One is a long-term loan and short-term loan. Here it is not specifically given which loan it is. It is assumed and considered that loan from IDBI, it is a long term loan and taken in the next schedule. Then another one is a sundry creditor. It's a current liability. Okay, you can show this sundry creditor as current liability. 1,50,000. Separate schedule is disclosed here. Then plant and machinery is another one, fixed assets. So land, building, then plant and machinery, 2,50,000. It is available in non-current assets. Again I am telling, current assets, non-current in the sense fixed assets. As per the new format, we have to show only as non-current item, not as fixed assets. Then sundry creditor, plant and machinery, capital redemption reserve, CRR. It is shown in reserves and surplus. Okay, so under reserves and surplus account, all sort of reserves should be disclosed, should be shown in this schedule. So CRR I mentioned 20,000 rupees. Then investments in 6% GP notes. What is that investment? It is the investments made by the company. Okay, so non-current investment, that 3 lakh rupees you are showing, right? So investments, non-current investments, this should comes under asset side of the balance sheet. Then is there any current investments? Yes. If it is the short-term investment, it is current investment, whereas in this case, this is a long-term investment. So we are taking it as non-current investment. Okay. Then another one is surplus account. You know what it is? Surplus means profit. The another one term for the surplus is profit. We are taking that surplus under reserves and surplus. So in this schedule, part B is surplus. 65,000 we are taking there. Then cash in hand. What is this? Cash in hand is any amount of cash in hand, cash at bank. That is cash and equivalent item. In that schedule, we have to take it. 25,000 is shown as cash and cash equivalent item. See, you have a look on that balance sheet asset side. Under current assets, that last one is cash and equivalent item. And another one is debtors. Debtors, stock, these things are current assets, whereas here for that stock, as far as that stock is concerned, you are having separate schedule inventories. Like in that only you have to take the stock. Whereas for the inventories, in that you have to take the stock. Whereas for the debtors, you are having another one separate schedule, new term called trade receivables. So trade receivables, account receivables, those things are considered in the trade receivables. Okay. So what is that? Trade receivable. What the amount to be collected is trade receivable. What the amount to be paid is payable. Okay. So trade receivables. Then stock I explained. Then another one is a goodwill. Goodwill. That goodwill is the item of goodwill is taken under non-current item. So you know very well. Goodwill is normally taken under fixed assets. Okay. So goodwill is taken under non-current assets. Okay. No adjustment is given in this question. So if we total it, then assets are supposed to be tallied with the liabilities. Okay. Likewise, we have to prepare the balance sheet. Both assets and liabilities should be tallied as usual. Only thing is for information wise, the things are disclosed under separate schedules. Okay, that is the only difference here.